week of earnings coming up. Earnings season is in full swing, so expect the market to be extremely, extremely volatile. I wouldn't be surprised to see some of the leading stocks either gap up 5 to 10% or gap down 5 to 10% based on the earnings reports. So if we look at the NASDAQ right here, up fractionally in futures trading. S&P, same thing, up fractionally. I don't really think we're going to see much movement here on Sunday night. What I do think is that as we look forward to the earnings, all hands are going to be on deck. We have Tesla reporting earnings, we have Apple reporting earnings, Amazon, Alphabet, Google, Microsoft, Atlassian. So what I wanted to do in this video is do a quick deep dive into some of the reports that I'm focusing on extremely, extremely closely. So without further ado, that brings us to our first one, which is Tesla. So ticker symbol TSLA. As we could see here on the weekly chart, Tesla is trying to form a little bit of a cup base, potentially with a handle if we sell off a little bit more to around the 700 range. So if we look at the Investors Business Daily excerpt here from the paper, I'll just read it for you guys just so we can sort of be on the same page. So Tesla earnings is seen soaring. The maker of electric cars will release earnings after the market close on Monday. Analysts expect EPS, or earnings per share, to soar 216% to 79 cents, as sales climb 66% to $9.92 billion. Tesla had Q1 deliveries of 184,800 vehicles, which was a 109% increase from a year ago and 2.3% more than Q4. The company will report the first time since it bought Bitcoin, essentially $1.5 billion worth of Bitcoin in February, and began accepting cryptocurrency as payments for their electric vehicles. So guys, this is a huge earnings report coming up for Tesla. With the valuation that Tesla has in relation to its earnings and sales, the littlest thing wrong with this earnings report is going to absolutely crater the stock, right? A lot of things have to go right for Tesla. I'm very, very bullish on the long-term outlooks of Tesla, and I think that they can deliver. So if we look at their 2020 earnings per share, annual earnings per share, they returned about $2.24. In 2021, they essentially doubled that, or up 85% to $4.14, and in 2022, analysts are estimating that Tesla will earn $6.23. And on this channel, I sort of talked about this before, is that price action always follows earnings. So just as long as a stock, let's say if they earned $2 2 years ago and projected 5 years down the road, they're expected to earn $10, you could generally speaking, generally say that stock is going much higher. So if we look at Tesla, we're going to see about 79 cents in comparison to the year-over-year quarter before, which is up about, I believe, 216%. So that is explosive earnings growth. And hopefully, with the deliveries can continue to hit right on schedule. I think this is going to be, a stock that you potentially want to stay long, just as long as they continue to hit analyst expectations and even exceed them, right? Because if you have a high flyer stock like Tesla and the littlest thing goes wrong with that earnings report, this stock is going to crater after hours. So you either want to see them meeting expectations or, better yet, beating and raising the expectations for the future quarters. Next, let's jump to Amazon, ticker symbol AMZN. So as we could see here, we're forming a little bit of a consolidation pattern. As I've explained on previous videos, I think that this consolidation pattern is very similar to the one here that started in late 2018. What I think is happening is companies tend to grow into their valuation. Right during the coronavirus, this stock pretty much went to the moon, right? It went on a monster run, almost up 100%. So it's sort of digesting those gains, which is normal to see, right? We don't want to see just the stock go completely parabolic without any sort of pullback. So I think Amazon's price action is very healthy due to its valuation. And I think just analysts and the street or Wall Street just wants to see a couple of earnings reports cycle through to see if that valuation can sort of justify itself. So again, if we read this excerpt from Investors Business Daily, we'll see that Amazon profit is expected to pop. So the e-commerce leader reports late Thursday, with analysts expecting for an 89% jump in earnings per share to $9.46 on revenue of $104.4 billion, up 38%. A focus will be on Amazon Web Services, or AWS, its cloud computing business that has taken on increasing importance. Another focus will be ad revenue growth. So again, guys, if we look at the 2020 EPS annually, they earned about $41 a share. In 2021, they will earn $47.87 a share. And then in 2022, we have a huge earnings jump up about 39%. They're expected to earn $66.48 a share. And this goes back to my regular investment process, Can Slim at Investors Business Daily, that pretty much states, if companies are consistently growing their earnings, they're growing their revenues, they have phenomenal return on equity and positive cash flow, you can expect the stock to trend higher. And I think that as a lot of companies all across globally move to the cloud, Amazon Web Services is going to continue to grow. And also, as we move into our other earnings player this week, Microsoft, I do truly believe that Microsoft will continue to grow market cap, will continue to grow market share with its Azure cloud platform. So that's a great segue into Microsoft. Let's check out Microsoft, ticker symbol MSFT, that is reporting earnings this week. Just so you guys know, I am bullish on all of these reports. I think the stock market is going to continue to trend higher. What I like to think holistically, right? I know that there's a global pandemic. I know that there's a bunch of fear. I know that the stock market has just gone up in a straight line. But if you block out all of the noise and understand the most important fundamental of the market is number one, no, it's not earnings. It's the Federal Reserve. The Federal Reserve is going to continue to full bore hammer on the gas. They're going to continue to pump money and flood the market with money. Easy money policies are going to continue for the foreseeable future. The 10-year yield is pretty stable. So I think this is a very stock market bullish environment, especially with earnings coming out, and companies are expected to blow out their earnings. They're expected to grow their earnings significantly. So that brings us to Microsoft. So the software behemoth is set to report late Thursday, just like Amazon is. And analysts are expecting EPS, or earnings per share growth, of $1.78, up 27% on sales of $41.03 billion, up 17% in its fiscal Q3. Cloud computing sales momentum is likely to be the story for Microsoft's earnings report. So I just want to touch on one quick thing here with Microsoft. And I'll just read this sentence again. So analysts are expecting sales of $41.03 billion, up 17% in its fiscal Q3. When a company grows to the size of Microsoft, where they're doing over $41 billion in revenue a quarter, and they're still growing at the high teens in terms of revenue, that is unbelievable. That is a stock that you want to get long and you want to stay long. Like, just think about that holistically. Like, think about a small company, some companies that are doing $50 million, $100 million a quarter, they struggle to grow in the high teens in terms of their revenue. Microsoft is doing that on a multi-billion-dollar quarterly revenue. Like, that's insane. That shows a healthy company. That shows a company that's really going to lead into the future. And if you look at, even the monthly chart, price action follows fundamentals, right? Price action will always follow the fundamentals. So ever since Microsoft has been growing their revenues, in the high or mid-teens, this stock has been on a steady trajectory higher on the weekly timeframes, starting in 2014. So just always remember, it's not all about just trying to look at the technical analysis on the intraday charts. Zoom out, go to a weekly chart, look at the fundamentals, understand the business model, and ask yourself, is the company growing its revenues? Is the company growing its earnings per share? What is its return on equity? what institutional investors are buying this particular stock? Those are the questions you need to ask yourself, and those are the type of questions you need to be talking about, not intraday price action. You need to zoom out, look at the macro picture, and say to yourself, is this a growing business that's sustainable for the long term? Microsoft absolutely is. Like, this is a stock, I just buy it, hold it, don't even look at it. I mean, if they can grow their revenue at 17% on a $41 billion quarter, like, that's unbelievable. And again, like I said, as more companies and businesses move to the cloud, their Azure platform, which is a competitor to AWS, I think will really outperform and continue to grow revenue and streamline that market share in that sense. Lastly, we have ticker symbol AAPL, which is Apple, that's reporting earnings, and I think this is going to be probably the most sought after earnings report for the week. So the consumer electronics giant reports late Wednesday. Wall Street sees earnings per share of 98 cents, up 53%, on sales of $77.1 billion, up 32%. Again, a company like Apple that's doing over, it's insane. $77 billion and they're growing their revenues at 32%. Like, that's unbelievable. This is a stock that you want to buy and hold and never look at. So investor focus will be on iPhone 12 sales amid 5G wireless upgrade cycle. Apple also is scheduled to update its annual capital returns plans, including share buybacks and dividends. So this is something I haven't really talked about on this channel, but this is something I do look at in my holistic investment thesis. What I want to see is the companies I'm investing in, are they launching share repurchase programs? And essentially what that is, it means a portion of the company's earnings. Not only do they invest money into R&D, which is research and development, but they will also take billions of dollars and buy back their own shares of common stock. And essentially this increases earnings per share because it's taking more shares of stock off the open market, right? So the company believes in itself so much that it's willing to buy stock at its current valuation because it believes it can make a return on it down the road because it thinks its own stock is undervalued, right? So that's another thing I love to look at. I love to look at buying stocks that are growing sales, growing revenues, growing earnings, and that are also launching massive, monstrous share repurchase programs. This is very controversial because a lot of regulators and people that are very critical of Wall Street, they say, all of these companies are raking in windfall profits. They're not giving it back to their employees. They're not raising salaries. What they're doing is they're enriching themselves. They're enriching the CEOs and enriching Wall Street and the big investment banks by launching large share repurchase programs. My opinion on this, guys, I do agree with that, but we're here to make money. So, as long as that's the case, I'm going to continue to keep that in my investment thesis because I'm here to make money, okay? I'm not here to be a moral compass for anybody. If they want to change the rules, fine. But so long as companies are able and willing to relaunch unbelievable and, quite frankly, cartoonishly ridiculous share repurchase programs, I'm gonna trade off of that information. So I think that about wraps it up. Oh, I do have one last thing for you guys. Atlassian. So Atlassian is another tech company that I'm very, very bullish on moving forward that I've owned for quite a long time. Their ticker symbol is TEAM. So Atlassian, I think, is reporting their fiscal Q3 earnings on Thursday. So Thursday is going to be a packed day for earnings. Maybe I'll do a quick live stream for that. But I believe analysts are expecting their estimates of 16% EPS growth, so about 29 cents. Let's see if that makes sense. Yep, so 29 cents on the EPS, and I believe they pre-announced their revenues, Atlassian, of about 566 million to 572 million, up about 38%. So Atlassian is one of those companies that I'm bullish on for the long haul. One of the other companies I'm very, very bullish on is ServiceNow, so ticker symbol NOW. Atlassian just crossed their first $500 million in revenue quarter, and they're almost at $600 billion revenue quarter, which they may just nick it. They may just report that $600 million quarter. And I think that over the next 5 years, Atlassian is going to be doing just on the same trajectory as ServiceNow to $1 billion quarter. So I'm long this stock. I don't plan on selling at any time. And yeah, if you look at ServiceNow, back in 2019 in their March quarter, they were still doing under $1 billion in revenue a quarter. Now they're well over $1 billion. So I think Atlassian is going to be on the same trajectory. If ServiceNow has a $108 billion market cap, I think that Atlassian one day will have a $108 billion market cap. No doubt in my mind. Fantastic return on equity at 51%. And it's growing its EPS, and for its 2022 projections, it looks like earnings are going to come up about 19% to $1.43 per share. Real quick, we'll look at cryptos, and then we will call it a day. Cryptos had a hard sell-off, guys, but like I said before, I'm still bullish on Bitcoin. I think any of these dips should be bought. With all this craziness coming out with the Biden administration, with all this tax noise, I think this dip is going to be bought. Oh, wow. Oh, wow. And it's already being bought. Look at that look at that dip buy. Wow. Yeah, whenever you see these daily candlesticks, and I'm not really big on technical analysis, but whenever you see these candlesticks that have these huge wicks, that means there's huge buying support here. So I think that any dip in Bitcoin should be bought. I think that any dip in Ethereum should be bought. And we will regroup after earnings tomorrow. And I hope you guys have a wonderful day. See you in the next one.